So what we are going to do now is really try to understand how we control our emotions, how we can live toward true potential. So now I'll take you to the starting point of behavioral finance. Okay, now we'll start with the questions. As I told you, we'll have a lot of quizzes coming. Don't be scared of any quizzes. It's not testing your IQ, it's testing your EQ. Everyone is the same. Everyone's emotional bindings are different. So, be true to yourselves when you try. Okay, now what would you prefer to buy today? The markets are going down. The stock markets are down. Would you prefer stocks or would you prefer bonds? How many for stocks? 2, 3. Everyone for stocks. Everyone is excited about stocks. Oh, this is going to be a good thing. And how many for bonds? Fix, yes. Okay. This is how equities have performed over a period of time. These are the figures since the last 20 years. Equity is about 17.70%, PPF was 9.80%, and cash is about 3%. This is the historical returns over here. Now let's go back to 2008 when the markets were down and out. How many really felt like investing? Felt like investing. Okay. Now, why does this happen? There was a bull market and there was a bear market. Today we are in the midst of a half bull market, I would say, and still people want to invest. Do you really want to invest at this time when you know in our country every day there is a scam? You know that we have courts of law but no courts of justice. All the scamsters, one by one, they are getting out of the CBI net. You know that the inflation is going up so much. With all these factors, can any one of you tell you that why do you invest in equity? Why do you feel like investing in equity? Now anybody from you?
Because we know that the Indian consumption is going to grow. Indian consumption as a fundamental economy is going to grow.
Yes, if the thing consumption will grow.
Scams are a part of our this thing. I mean, the stocks have gone. We believe that our bureaucracy in scams are going to be there. It's going to be that factor. I mean, we are going to go ahead with that. That's the way it is.
So, irrespective. Now, this is again this thing talks to us about a habit. Now, we have formed a habit with us that we understand this thing that they have to. Their scams have to be in this country. But is it right for a younger generation like you even thinking like this? Then why do you want to accept it? There's no reason for us to accept it. The problem is because our fathers accepted it. That's why it is happening over here. Any other reason why someone wants to go in for stocks in spite of such a situation? Because all those guys who told me that stocks, then you got to have a reason. If this is happening, the markets are going down every day. Why do you want to go? Yes.
Quicker and higher returns.
Okay. So just now, I thought you will not answer this question because I just talked about instant gratification. So that's one of the fault we are having is the thing again because it's that instant gratification which takes you over there. Okay. And are you so sure that you can make money? You want to invest and you make money? Because my 30 years in the stock market, having a terminal in my office, not paying any brokerage because I don't have to pay brokerage to myself, I have never got an opportunity to make profits. Now, what is the reason that you think that you can make quick profits over there?
I keep my portfolio, I invest so much. In another week, I have a 10% return.
Correct. Can you do that consistently over a period of time, every week?
Not consistently.
Correct. Now, if that was true, would you believe that no taxi drivers would fly the roads, no bus drivers, they all will be at the stock market every week. I put this money, I get this money. It's an illusion. We'll come to that. It's a part of the behavioral finance core. Because you are guided by people telling you, I made money, I made money, I made money. Now, everyone around you talks about, I made money, I made money. Would anybody tell, hey, I lost money? Because you will either call him a fool, or tomorrow if he asks you for money, you will not lend him. Because you will find, no, this guy is broke, so how can I deal with him? So there are various factors over here which don't allow you to know exactly what is happening around. Any other reason or anybody? Say I want more interaction, otherwise I have to talk too much. Then I get bored.
Sir, in the long term, equity always outperforms debt, or be it the Nasdaq or be it the Sensex.
Yes, that's why you want to put in equities. Correct. Now, in the long term is a chart which I have shown you. 17% equity. That's why people are looking at it. Correct. 2008, when those stocks were 1/3 of these rates, they think, why nobody wanted to invest?
Sir, stocks were valued at lower than their book value.
Is it good or bad? It's very good. Then when I asked that just now everyone wants to invest, 2008, how many? Very few people came in. Very few people. No, I'm just trying to just reflect on this. I'm not trying to prove my point with anybody. I'm just trying to just reflect. Okay, why? Why was this happening? One question, they think, everyone hands up, okay, they think majority hands up that we want to invest in equities. And 2008, when everything was so down, why nobody wanted it? It's a question. Now this is behavioral finance. This is behavioral economics.
One reason was that people had already their money locked in loss-making stocks, and nobody wanted to pull out money and invest in some other opportunity.
Yeah. We'll go across all those things that sometimes these are different types of behavioral anomalies. This is that a loss aversion was there, or you are anchored to a certain stock or something. But if equity returns are good, then don't you think that when the markets are up, you should be thinking of selling the stocks rather than buying the stocks?
It's always that people postpone, maybe I'll sell tomorrow, maybe I'll sell tomorrow.
Correct. Sell tomorrow is when the market is going up. And sell, they're saying buy today is when the markets are going up. So you are always buying high, and when the markets are going down, no, you sell before that. How many people remember Reliance Power issue? Oh, lot of people. Okay. How many applied for it? Now, did you do the right thing? Today you will tell me, no, I didn't do the right thing. But at that point of time, also, it was 5,000 P. Do you remember that? It was 5,000 P. In spite of that, why did you all apply? Because you are supposed to be rational people, understanding that I cannot invest in a stock which is so expensive. Why did everyone invest over there?
That time there is listing gains on most stocks, so everybody thought that people are applied on listing one get.
Correct, but then didn't you realize that India is power deficit, but power, anybody cannot charge anything, it is capped. There are so many things which are against that, when they're abiding, they think you are all MBA students, and how could you make a mistake like that? Because this was the most rational thing to do was, no, I don't do it. Listing gains has no meaning. Are you buying an asset which is right price? Are you paying? It was 5,000 P. 5,000 P. There's never been a stock over here. They think it's only in this country that he can live to tell the tale that I became one of the biggest, my IPO was the biggest success story. Now that shows that how many stupid investors we have in this country. How many irrational investors we have in this country. It shows us. Now, if that is there, don't you think that we understand our rationality, other people's rationality? Don't you think that the Maidan is absolutely free if you only understand certain things about behavior? There is no competition because most of the people are doing stupid things like this. Now, how many of you have made money in the stocks? You all want to invest. He wants weekly profits. How many of you have made money? Not very few. Why hasn't everyone made money in the stock exchange? Not even you? Now you put your hand up, no? Yeah, okay. Okay, only one person has made money over here. No, but why they are not putting their hand up? Come on guys, yeah. You can't do this thing. Hide something from me. I'm going to be there with you for 14 sessions. We are more as friends. I told you, don't call me sir. So how many have made money?
In equities, I lost in derivatives.
Derivatives. Okay. You made. Good. You made.
So I entered in 2008.
2008. Good. You had the guts to enter. Okay. What you thought? Maybe you didn't lose money. You lost money. So some must be thinking, I don't have knowledge. Most of you would have joined over here. Parag Parikh is going to talk. So maybe we'll have some knowledge about this thing, how to invest. Well, even I don't have knowledge. Yes, I'll tell you, the key to right investing is there. But if you ask me an expert, no, I'm not an expert. But I'm a man who uses common sense, which you will learn over a period of time. You didn't make money because professional skills, you thought that you should be skillful enough. Or maybe you didn't have the time or the focus because you have to study. And how long can you stand, sit in front of the terminal to try to identify, now I'll buy this and then sell this. Believe me, that's the only way you can lose money. Sitting in front of the terminal is the only way you can lose money. You know why I'm telling you this? Because most of you may be aspiring to join the financial markets and try to do certain things. And I'm sure after my 14 sessions, you'll go there as ace traders knowing what not to do. Not what to do. As long as you know what not to do, the challenge of the markets has been won. And there are a whole lot of things not to do. So that can make it boring also, because in a year you may be sitting not doing anything, but it's one day when you do it makes all the difference. 2008, our organization, we used to have every month a seminar asking people to invest. Now, the human mind is such that the inference which they got from that was, oh, now I think his business is doing so badly that every month is having a seminar asking us to do because it's a bear market. We are doing it in only one single way, that today the opportunities are galore. You cannot. You were getting stocks. A stock like Emphasis was available at 4 to 5 times earnings. It was available at 130 rupees. In 2 years, today it is 700 rupees. It was not one. Maharashtra Scooters, 60 rupees stock. It had gone down from 400 or 500. 60 rupees. Given the dividend of 6 rupees. 10% dividend, tax-free yield. And people were selling. We used to tell people to buy. People are not buying. Now there was nothing intelligent or brilliant about us. What we told was, today certain businesses are available at rock bottom prices, let's buy it. If you ask me, in last 2 years after 2008, I would have bought only 4 to 5 stocks where a value emerges. That's why investing, when I tell you, they'll tell you what not to do is that don't get into the daily habit of buying, selling, buy, because it will only confuse you. Now you went to the mutual funds, thinking professionals, strong research, global research. Mutual fund, as the name signifies, captures the mutuality of the market. When the markets are up, mutual funds are up. When the markets are down, mutual funds are down. Investments have always done well. But my friends, investors have always done poorly. Now, isn't it one of the biggest paradox? If investments have done well, why have the investors done poorly? Can anybody give me a reason? You are buying an asset class which is doing exceedingly well.
Bad timing.
Bad timing, that is one reason. Everyone has bad timing. Few people would have bad timing. That's a good answer.
Wrong trades.
Wrong bets. There's another issue about this is investors find a stock less risky when everyone is buying and when stock prices are going up. And they find it more risky when nobody is buying and when stock prices are going down, like what you said.
So they also don't get a falling knife and
Catching the falling knife, this thing. But it depends. That's why investing is not about buying stocks. It's always about buying businesses. The thing. That was when I talked to you about my this thing, that when I failed in that. Next was to understand the business. Today, Emphasis, I didn't know that Emphasis will go to 700 rupees in 2008. I knew one thing, that it's a great business. HP had taken over and they get all its business from HP at the current market rate, and that business was available at a fantastic valuation. It was available at 3 to 4 times earnings. Where do you get business like that? Any answers on that?
going with the market sentiment.
Yes?
Going with the market sentiment.
Sentiment, yes. Sentiment is the main thing. We are going to be talking on sentiments. Psychology. What is behavioral finance? Psychology plus finance. 1 plus 1 in finance is how many? 1 plus 1? 2. It's finance. If it's plain finance, 1 plus 1, how much is 2 plus 2? 4. Okay, what is 1 plus 1 plus psychology equal to how much? It can be 5, it can be 7, it can be 0, it can be 100. In 2008, everyone thought 1 plus 1 is equal to 0. That's why nobody put their hands up that we want to invest. In a bull market, it can be 100 also. So when psychology comes, it depends that people do crazy things. You can think of anything. In the tech boom, there were stocks like DSQ, Pentafor, where people had never heard about them. And those were quoting at fantastic rates, and people were still chasing them. That was a classic example of 1 plus 1 plus psychology was 1000. Last year, or year before last, real estate. Real estate, the same situation was there. Real estate is good. I agree with you. Real estate is good. But that means you can't buy real estate stocks at any price. And people were buying real estate. So what happened to them? They paid a fancy, because what they were doing, they were chasing a fancy. And when the fancy goes off, what happens? When that psychology goes off, you have a fancy loss. Beyond that, nothing happens in the markets. Remember one thing in the stock markets, there is no anything like telling sorry. Only thing you have to lose money. That's why it's a very expensive market to take your training. But to take that training, you have to lose also. There's no way that you can just be in the market without losing money, because you become wiser only when you are slapped or you trip. Otherwise, you don't get wiser. This is the traditional economic theory which we have learnt in schools and colleges. Markets are efficient and people make rational decisions to maximize profits. Everyone would agree with this? GIMS, also you have been learning all these things in GM. Well, the behavioral economic theory talks about inefficient markets. If we all were to go down the stairs, and if there is a 5 rupee coin, and if I tell you there is a 5 rupee coin, your first reaction would be, how can there be a 5 rupee coin? That it would have been picked up by anybody, because markets are efficient. Every day hundreds of students go up and down. But don't you have opportunities like this where you find certain 5 rupee coins? Or in real life situation, you buy a new mobile phone. Mobile phone costs you about 10,000 rupees. You go to the salesman. The salesman tells you, yeah, this very good mobile phone, this, that and all. You agree to buy, and then slowly he tells you that why don't you buy? 1 year guarantee is free. Next year you take a guarantee. How much? 500 rupees. Now 5% you pay for a mobile phone which has least chances of conking off on the second year. Maybe the chances are about 1% to 2%. 200 rupees maximum would be its insurance value for the second year if you want to take it. And this salesman is offering you for 500 rupees. By your traditional economic theory, markets are efficient. Don't you think the price of that insurance should come down to 200 rupees? It has to come down to 200 rupees. Now who will bring it down? Does it make sense for anybody else? You have bought the mobile from someone else and come and tell you, I'll give you this insurance on this machine for 300 rupees or 100 rupees. Markets are efficient, but under certain situations, markets are not efficient. After 9/11, everyone was selling insurance policies of flying at the airports, because if they sell, they would get something. But was it the right thing to do? Because after 9/11, the second day was the safest to fly, because 9/11 don't appear, this thing happened every day. But would it make sense for any other insurance company to open a booth over there, keep a man over there and tell, no, you don't buy insurance policies because they think it's not worth it. So markets are not efficient the way we think them to be, because people are irrational, and as long as companies can exploit that irrationality, the companies will never open their mouth, because they are in a profit motive, and it doesn't make sense for them to tell you not to do certain things. Behavioral economics is all about markets are totally inefficient and people do not make rational decisions. Now, if people are making rational decisions, how would one explain people giving to charities, or people celebrating a wedding or a birthday or an anniversary, calling people, throwing a party? Is this a rational thing to do by a human being? It's a very irrational thing. That it's your birthday, you have become 1 day older, and you call people and then you spend money for them and you treat them. It's not a very rational thing to do. But in spite of that, people do that, because by nature, people are not rational beings. We are supposed to be rational beings. Why do we give tips at a restaurant after we have a dinner?
We like to thank the person who served us.
Thank the person in that. What is the meaning of tips? What does the acronym TIP stand for? To ensure prompt service, correct? So you should have given the tip before. Then only you will get good service. Now we do it. Yeah. So now your service depends on the guy before you has given the tip. Yeah. So actually we all make these mistakes. But I'll tell you, they're saying since last 4 years, I have started doing this, that giving a tip before, and it really makes hell of a difference. Hell of a difference. Why does it make hell of a difference? Because everyone else around is doing something different. Everyone else around is tipping afterwards, and if I give, it makes a difference, because first is, from his psychological point of view, you see, that he doesn't know whether tip milne wala hai ki nahi. Leave aside an ensure prompt service. He doesn't know a guy, because, and I know of so many guys, last moment they'll pick up a fight with him and then tune ye kiya nahi, abhi tip nahi deta hai. That's human nature also, no? Because he wants more for less. So, people are, they're saying irrational people doing certain things without understanding. Now, to ensure prompt service, if someone knew that, and in spite of that, if they give that, is what? Even I knew that. So it's not that I'm trying to run you down. We both were on the same boat. But then we go on doing certain things even without thinking what is there. Now, when we are making this thing, why do we make certain irrational decisions like this? Does anybody have a clue about why do we do these things? Why do we throw a party? Why do we celebrate a wedding? Custom?
Affiliation.
I beg your pardon?
Affiliation.
Affiliation? Satisfaction? Correct? Yes, yes. From where do all these things generate from? From where do these things generate from? I agree with you, it's all these things. But what is it? It is a function of what? From there, this thing. Had you been taught that you got to keep affiliation, you got to do certain things? Have you been taught in schools and colleges? Affiliation, is it a rational thing to do? If it's a rational thing to do, then you cannot be taught in a college or a school. Because they only teach you to do rational things. Anybody has a clue from where this is generating? Why is this happening?
Partly expression, partly conditioning.
I agree with you. But then what part of your body is making those decisions? Will your mind tell you to do this? Is your mind talking? Affiliation is there. Is your mind telling you this thing you'll have to do this?
Human pursuit for affiliation, earning, love, affection, caring, listening.
Correct. Is it rational thing to do? Would it benefit you as an economic animal when markets are efficient, people are rational decision makers, doing everything for their wealth maximization? Is it a rational thing to do?
It's not rational, but in my opinion or nature, I think it in my opinion, maybe it comes from within, by your upbringing or by the society that you live in.
Yeah, you're getting close. You're getting close. I think what you say is right. The real thing is, it's coming from the heart. Now we human beings, we have a mind as well as a heart. Now every time, according to the traditional economic theory, you're supposed to make decisions out of your mind. Because those have to be rational. Nahi, ye milega to ye karega. No, this thing, that's what your, this thing, calculus and all show. This happens, this happens, this happens, this happens. And when your heart comes, then you lose all rationality. And we have a mind as well as a heart. Most of our decisions don't come out of our mind. And when they come out of our heart, we do certain things which may not be in our right financial interest. It's because of the heart when it overwhelms. Haven't you heard about a boy and a girl, they are madly in love, and one guy throws himself and does suicide and dies? Not a rational thing to do. But that time what was doing is, the heart was in command. That, no, you do this, because he was overwhelmed. And the trick of behavioral finance is to understand the thing that mind is on one part, the heart is on one part, and how we tread that for our financial interest. And it is because of this that even smart people make big money mistakes. IQ has nothing to do with money mistakes. It's the heart which is important. You want to be successful in the stock markets, this intelligence and brilliance only carries the day. It is the wisdom that works in stock markets. Which bright guy had predicted the 2008 meltdown? Nobody can do it. No research analyst can do it. You have analysts sitting in a broker's office and trying to tell you, ye company aisa karega, ye aisa karega. Now the management also does not know that what will happen to his company 1 year down the line, and these people project for the next 5 years what will happen. So none of those things work in the markets. Like one person had mentioned over here, It is basically the sentiments, the psychology of human beings which make you make mistakes. When 2008 was there, when everyone was selling, there was fear all around. That time, if you had self-discipline and self-esteem, you would believe in yourself, because you would know that 2008, everyone around me is selling. I am getting an opportunity to buy. I am getting such stocks at such rock bottom prices, I can buy. Now that is a result of a courage which you develop with your self-discipline and self-esteem. And this courage is also like a habit. Once you go on consistently doing it, these are habits of success. You were that time really delaying instant gratification. Everything was going down. There was no instant gratification. You had to just pick up that stock because you know that no, I know future mein, over the long run, I will benefit. So everyone who invested at that point of time, they were delaying instant gratification, and that is the reason they were successful. Warren Buffett, everyone would have heard about him. Success in investing doesn't correlate with an IQ once you are above the level of 25. Once you have ordinary intelligence, what you need is the temperament to control the urges that get other people into trouble in investing. Well, I am telling you how true this is, because we also follow in our firm Warren Buffett's principle. We do the same thing. Irrespective of a bull or a bear market, in our office, things are the same. People go home by 6 o'clock. They come in the morning by 10 o'clock. Everything is so simple. No chaos, nothing. And it is only when you don't have chaos, don't have pressures, that is the time that you can think properly and make your decisions.